the entire crypto market cap dropped by over $100 billion. That's an incredible amount of value that just vanished.
And the pain was really concentrated. Get this, in just the final hour of that crash, over $650 million in long positions were completely wiped out. That is the real story here. Traders who were betting on the price going up got absolutely steamrolled.
Right, so these numbers are staggering, but they're really just the headlines of a much bigger story. Let's dig into the mechanics of why these markets went into a total freefall. Well, it all started with the king, Bitcoin. It just plunged right through some critical support levels, breaking below that psychologically important $79,000 mark. You know the old saying, when Bitcoin sneezes, the rest of the market catches a cold, and this was a major trigger for all the chaos that followed. So what do we actually mean when we say positions were wiped out? It's this process called long liquidation. Just think of it like a forced sale. Basically, when traders use borrowed money, that's leverage, to bet on a price increase, a sharp drop can trigger an automatic sale of their assets to cover that loan. And poof, that's the wipeout.
And this is where things get really dangerous, because it creates this nasty domino effect. Each one of those forced sales pushes the price even lower, which then triggers the next wave of liquidations. It becomes this vicious cycle of selling that just feeds on itself and makes the crash accelerate.
But right in the middle of all that panic, the blockchain data, the public ledger of all transactions, it picked up something else. Something very big and very mysterious that adds a whole new layer to the story.
This is the central question, isn't it? While everyone else was reacting to the crash, one massive player made a really significant move. So who were they, and more importantly, what were they doing? In crypto, we call an entity like this a whale. They hold so much of an asset that their actions, buying, selling, even just moving their funds around, can create waves across the entire market. And this whale was definitely making some waves. Okay, so the hard data shows us exactly what happened. 817 Bitcoin, worth over $56 million, moved from a wallet that's linked to Robinhood to a completely unknown address. We have no idea who sent it, and we don't know where it's ultimately going. So what's the plan here? You have to wonder, when a whale moves this much money during a crash, is this a good sign or a bad one? Is this bullish or is it bearish? Well, there are basically two ways to look at this. The bears, they see this as the whale getting ready to sell, to dump on the market. But a more neutral or maybe even bullish take is that these coins are being moved into secure long-term storage, or maybe for a private sale that won't even impact the public price at all. And this is where history gives us a really important clue. When large amounts of crypto are moved off of exchanges, it can actually reduce the available supply for sale, and that can be a positive sign. It doesn't guarantee anything, of course, but it means we can't automatically assume the worst. So with all this chaos and uncertainty, it's easy to just focus on the fear, right? But in every big market shakeout, some analysts start looking for where the next opportunities might pop up.
One area that's getting a lot of attention is Ethereum's Layer 2 ecosystem. We're talking projects like Optimism and Arbitrum. These are networks built to make Ethereum faster and cheaper. The theory here is that during volatility, traders look for safety and foundational technology, things they believe will be essential for the next wave of growth. And historically, the activity on these networks does tend to rebound quicker.
So if you're watching this space, what are the signals to look for? Two key metrics really stand out. First, a jump in transaction growth. And second, an increase in something called total value locked, or TVL, which is just the total amount of assets deposited into that ecosystem. A rise in either of those can be an early sign that confidence is returning. All right, so let's boil all this down. What are the big takeaways? First, these sudden flash sell-offs are triggering massive cascading liquidations. Second, these huge mysterious whale transfers just add another layer of strategic mystery to all the chaos. And finally, even in a big downturn, some of these infrastructure-focused altcoins could emerge as pockets of strength. And all of this leads us to the one critical question that, frankly, everyone is asking right now. What comes next for Bitcoin? Have we found the bottom, or is there more pain to come before the next big move up?